Good morning, fellow eToro traders and investors. This is Dan from Trading with Dan. Just a quick look at what I'm looking at in the markets this morning. So yeah, well, first things first. I did a post on the BTC shorts. Bitcoin and cryptocurrency aren't something that I actually trade on eToro, but this is was just an interesting occurrence that's going on. This is the Bitfinex shorts. The Bitfinex longs, and they're building up to near all-time highs, which is a lot of people positioned long. So yeah, I won't go on about that anymore. But yeah, so if you want to have a look at that, but yeah, so what I'm looking at is the three main markets that I trade on here. Oil. We'll start with oil. Oil is at around the top of its range. In this upward channel that we've got going on here, so I'm really looking for sells in oil, even though overall I am bullish of oil, due to what I think is going to be rising inflation going forwards. But I mean, at this level you can't really buy around here, unless you get like a breakout clearly above the trend line, which is still quite a bit higher than here. So I would be looking for trying to play out some sort of retest down to between $56 and $57 per barrel on WTI crude. Yes, that's what I'm looking at in oil. Over to gold. Gold is another asset that I'm bullish of, and I am basically looking to get along in here, because I think we'll at least revisit the midpoint of this drop. So about 1470 this week. I mean, I think that's a minimum we're going to get to, and then I mean we can react bearishly or bullishly from there. But at the moment, the only real buy based on my strategy was around here, but I didn't take the buy there. So we'll see whether we get a slight dip or a bit more of a dip. Maybe taking out because we're not far from these levels here. I mean, this was a move from, well, we spiked up to 80, but let's say we were around 75. So that move down to here was a $15 move. So I mean, a $6 move will take us below these lows here, which isn't impossible. So I'm either looking to, I'm looking to try and buy a dip, because I don't think we're just going to go smooth up and up and up. So I'm looking to buy a dip in gold, but gold is something I'm bullish on, and we are at the lower end of recent ranges. So now moving on to finally stocks. Stocks are an interesting one. I have been trying to scalp short trades in stocks, and again we're pushing towards top of recent highs, but stocks are a difficult one, and what the past couple of weeks has taught me is that if I think we're going to have a dip in stocks, trying to scalp highs in stocks, I'm actually better off trying to scalp lows in gold, because I mean sometimes stocks haven't really come off, and they've obviously been going up, whereas I've noticed if I just bought gold instead, hoping for a dip, gold would either go up anyway with stocks going up, or what would happen is, or stocks would come off and I'd win, but then gold would still go up. So I mean, especially with gold been at a bit of a discount at the moment, I am maybe going to try and play it that way, but you never know. I mean, if I do get a good sell signal, and maybe we're above like the 3150 level again. The problem we do have with stocks, not the problem, but that's not actually a problem. It's actually the good thing. The good thing for stocks is that this is like a really important factor. I think is that we had the headline good jobs report on Friday. I say it's a headline as in like the numbers on the face of it, on the headline, they look good, There are some structural issues with it, if you look under the hood of that one. But that aside, the headline number was good. The algos react to the headline, and the algos bought stocks. So that is showing that is the reason why this is so important, because recently we have been in a good news is bad and a bad news is good. So if we get bad economic data, that is good for stock markets, because that can signal more cutting from the Fed, more easing policies, and good news could suggest less easing from the Fed, less cuts, and maybe even potential hikes. I mean, you never know. So yeah, we're having the good is bad and bad is good. So what we do have now, a new dynamic in the market, is Powell has basically said that there's not really any circumstances that is going to raise rates, which I think is quite honest of him, really, because I don't think there is many circumstances he can raise rates, not with what is going on in the repo funding markets, and just the lack of liquidity that is around. The last thing he can be doing is increasing the cost of money and also decreasing the amount of liquidity. But so we now move into a dynamic where the good news is good, which shows that the market does think that it doesn't matter about if the news is good now. We're still not going to get any rate hikes or any less chance of more cuts or anything. So that puts us in the scenario now where bad news is good and good news is good. I know we did have a bit of a sell-off based on some things Trump was saying about trade deals, but I actually think trade deal talk and the tweets are driving the algos, but they're driving the bots, basically, the high frequency traders, the automated traders, automated trading programs, the black box programs. But I don't actually think it's actually that big of a deal as obviously Fed easing, Fed cuts, and Fed liquidity is. I mean, that clearly is the driver of the market. So we're moving on to a dynamic where bad news is potentially good and good news is good. So it's just upwards for stocks, basically. I mean, it defies all logic, it defies all gravity, based on the economy. And what is potentially going on in the debt-driven economy. But if you have a debt-driven economy, and then you have more basically debt being issued and cheaper rates of debt, then I mean, what is that going to do to assets, with assets trading within that economy? But yeah, so yeah, just a brief recap of what I'm looking at. So we're looking at basically trying to buy gold, maybe looking to sell rallies in stocks. I mean, obviously stocks were bullish and we had the dip, and that was to buy the dip. But so when we were sub 3100 in the S&P last week, so I mean, I'm now looking to fade higher rallies in stocks, and oil I'm looking for sells. So I may need a rally back up to $59 possibly. If we get that, I then look for a sell. But overall I'm actually bullish longer term on oil. But again, it's clearly trading in a trading channel. Oil does like to do that, like to trade within channels. So yes, that's what I'm looking at. I'll probably do another video later. So thanks for listening, guys, and yeah, good luck, happy Monday. Let's hope we all have a successful week.